Hello, young traders. Doing trouble there from Drfx, swing trading mentoring. Going to be taking a look at a few currency pairs that have shown some interesting movements over the last 24 hours, as well as take a look at the pound Aussie dollar trade that we're now in, as this currency pair continues the formation of a consolidation setup. Now, of course, everything is done within the context of these 8 steps, which once followed will allow us to accurately identify and forecast market direction and take advantage of profitable setups for strong trading gains. Now, taking a look first of all at what we had assessed yesterday on the Swiss franc Japanese yen, which was forming a consolidation. So the question now, based on the movement that has taken place over the last 24 hours, is whether or not a consolidation setup is still possible. Now, this was a setup yesterday where the market had formed the resistance boundary with these two resistance points and had already formed one support point. So it needed a second support point to complete the formation of the support boundary and then rally back to resistance to complete the formation of the overall range setup. So the expectation yesterday was that the market would rally, continue the U-turn bullish that has started at this area here, and take us toward this area and provide us with a trading opportunity. And what was needed here on a 4-hour chart was a strong bullish signal that would indicate the continuation of this movement and a break further above this downtrend line. But instead, as you can see, the market reversed and has basically taken out the bullish U-turn that took place. And so the question now is whether or not the market is going to continue the formation of this consolidation. If it does, then it's going to need a much stronger signal here to take out this bearish reversal signal that was formed today and provide us with additional confirmation of the start of this rally. Moving on to the pound Aussie dollar, which continues to show signs of a formation of a consolidation setup, both on the daily chart and the 4-hour chart. Long term, this is a possibility in terms of how a consolidation setup could be formed on the daily chart. A recent U-turn has taken place following these bearish and bullish waves, and this is indicating the possibility of a rally that would take us back towards this area here, where it would then U-turn and provide us with a bearish movement as part of the formation of this consolidation setup. However, in the short term, what was anticipated was that the market would form a smaller consolidation setup on the 4-hour chart that would require additional bearish and bullish waves over the next several days. Now, what was taking place was that the market had formed a double top formation followed by a bearish engulfing candlestick formation that indicated the start of a movement towards this area here. Taking a closer look, you can see that double tops combined with this bearish engulfing candlestick formation are two strong signals indicating the end of this previous uptrend and the start of a downtrend as part of the formation of this overall consolidation setup. Now, in terms of taking advantage of this expected downtrend, we went to the 1-hour chart where we identified the formation of this downtrend line, and the stop loss was going to be placed above that downtrend line to protect the trade as the market continues its bearish movement. So this was the setup for this trade, with the stop loss placed at 1.7555 above that downtrend line, with the entry taking place at the close of the candle, with the entry taking place at the market price, at whatever price this candle closed, which I believe it closed at 174.90. So as long as the candle had closed below 175, it was deemed to be strong enough. And given the range of this currency pair and the strength of this signal, which is expected to move the market pretty quickly, the target was set for 100 pips with the expectation that this is going to be hit within the next 24 to 48 hours. Here you can see the chart where you can see an example of a double top formation as well as a bearish engulfing candlestick formation, both of which have provided the indication of the start of a downtrend within the context of this consolidation setup. So double tops, bearish engulfing candlestick formations, very common when it comes to trend changes, generally speaking, as well as more specifically trend changes within the context of the formation of consolidation setups. Moving on to the euro pound, which is also showing signs of the formation of a consolidation setup on its 4-hour chart. This, as you can see here, has provided its first bearish wave, very typical of what you see when the market is forming consolidation. And the market is now moving sideways and has appeared to form, has actually formed a double bottom formation at this area here that has led to the break of this downtrend line. So assuming that this bullish movement continues, we would need the market to provide us with a strong bullish signal to indicate the start of this uptrend as part of the formation of this overall consolidation setup. Double bottoms are very common when it comes to the formation of waves within the as the market forms consolidation setups, and of course very common when it comes to trend changes. So this is a double bottom formation. It is sort of weak in this area here. So what you'll find is that if one area of the double bottom formation is weak, then it has to be compensated by a strong breakout signal and strong breakout setup. So for this to work out, this signal that is given here has to provide us with a strong bullish signal, perhaps a bearish engulfing candlestick formation that follows a temporary bearish signal in this area here, bearish candles, and that would have to be followed by a strong bullish signal. So an overall consolidation setup looks to be the scenario taking place on the 4-hour chart here. Bearish waves indicating the formation, very typical of what we see when the market is about to start a consolidation. Break of a downtrend line, as well as the formation of a double top formation, all pointing to the start of a rally as part of the formation of this overall pennant setup. Euro Aussie also looking as if it's forming a consolidation setup on its 4-hour chart. This, as you can see, the market has formed this first bullish wave, and this sideways movement that has taken place over the last several weeks could give way to the formation of a bearish wave that will lead to the formation of one of these types of consolidation setups. So these will be the first two waves, as the market would then provide us with additional waves, bullish and bearish, until it completes the formation of either a range setup or one of these three types of pennant setups. Another possibility is that instead of breaking this area here, as you would see, the market would need to U-turn following what appears to be the test of this broken support boundary. You can see that the market initially broke the support boundary with this bearish candle, moved sideways and then pulled back, and is now touching the support boundary once again. And this is something that is common before the market continues its break of a consolidation, where it will pull back and temporarily test the broken boundary before U-turning to continue the downtrend, the breakout from the consolidation. However, another possibility is that instead of U-turning to continue the breakout, the market could actually head back inside of the consolidation. This could take the form of an ABC setup, where the market would provide us with a bullish signal following a sideways pattern here, or maybe even a slight pullback. That would take the form of something like this, and would be followed by a strong bullish signal that closes above the support boundary and takes us back inside of the consolidation and back towards resistance. So these are the two possibilities right now in terms of the Euro Aussie dollar. Right now hovering below the support boundary that has been broken from this range setup, And we could either see the market break below this counter trend line set up here, this blue counter trend line, to resume the downtrend as part of the formation of one of these consolidations. Or we could see that give way to the start of a rally that takes us back inside of the consolidation. US Japanese yen, another one that was shaping up to form a consolidation setup yesterday. But based on the reversal that we're seeing here, it seems as if the shape of the consolidation has changed from one of a pennant with an angle where in this case, this was the chart, this was the original chart. This was the expectation that the market would rally towards this area here. And the 4-hour chart, what was needed, and this is very important, what was needed for the market to confirm the continuation of this movement was a much stronger setup that would need the market to provide us with a pullback followed by a bullish signal to confirm the continuation of this rally. Because right now, as you can see, most of this rally has been weak with fairly ordinary candles, except for the one that started the movement here. But this on its own was not strong enough to convince us to start trading long. So what was needed was a stronger setup in this area here to provide us with a much convincing indication of the movement bullish. So this was what was needed. But instead of providing us with that signal, the market pulled back sharply and has all but taken out most of these previous bullish signals. So it is very important in this case, as this example shows, that we need to know exactly what type of setup and what type of signal is needed in different scenarios. In this case, the reason why we needed a pullback was that the daily chart had given us a fairly ordinary bullish signal. So what was needed in this case to confirm this movement would be the 4-hour chart following up with a strong setup on its own to confirm the continuation of this uptrend. Once that is not given, then it decreases the possibility of a bullish movement. And as you can see here, nothing was given like that, and the market instead pulled back. So in the absence, in the presence of this weak movement and the absence of a strong setup and a strong signal to confirm the continuation of the movement, this reversal was always likely, and trading this long, despite the fact that we're above this downtrend line, was always going to be risky. Nevertheless, we're seeing that the market could have actually formed a different type of consolidation using this U-turn that took place. So as you can see, it looks as if this could be the formation of our pennant setup as well. And so confirmation will come if we see the market, if it rallies and then U-turns and responds by hitting this line, this area here. Canadian Japanese yen is another example of a reversal that took place in the absence of the signal that was needed. This was the setup for this currency pair, which, as you can see, was a very strong setup with strong candles and a very strong bullish signal on the daily chart. However, despite the strength of this signal, there were a few elements that made it risky to actually start trading this long. Even though this was a clear up movement, there was no strong stop loss area to place our trade, to use to protect our trade if we wanted to trade this candle. So as you can see here, and as I had pointed out yesterday, the only possibility was this area here, but this was weak, not much of a strong support area. And the only other strongest area would have been all the way down at this low point. And usually when you have a stop loss that's this far away, then it's not really worth the risk, and you open yourself up to the possibility of a reversal. So in response to the absence of a strong stop loss area that was near enough and strong enough, this was what was needed. A pullback followed by a U-turn that would allow us to provide us with a strong stop loss area at this area here that would better protect our trade as we traded this long. But as you can see here, this did not materialize, and the market reversed similar to what it did with the US Japanese yen. So it broke back below this downtrend line and is now back at support, where we could either see the market continue this bearish move and abort the formation of this consolidation, or we would need the market to provide us with another strong signal on the daily chart to indicate the continuation of the formation of this setup. But as you can see here, another indication, another sign that if the market does not provide you with the signal that you need in a particular context, then it has a low chance of working out. Again, similar to the US Japanese yen, because the market had not yet provided us with a strong signal nor a strong stop loss area, and the movement was fairly weak with ordinary candles, a strong setup followed by a strong signal had to be formed in order to confirm the continuation of the rally. Otherwise, the uptrend was unlikely to take place, and this was more like the scenario that was going to arise. So very important again to know the type of setup that is required in different scenarios. Wait on them and do not trade any at all if the market does not provide us with that required signal. Canadian Swiss franc is moving within a pennant setup that was formed over the last several weeks. The market recently rallied back to resistance and is now back to the support boundary. So what we're going to be looking out for is a stable signal at this area here that will take us back towards the resistance. The gap between resistance and support overall is about 75.57. So just under 70 pips, I believe, or just over 80 pips, or close to 90 pips in distance. So this could be possible in terms of a trading opportunity to capture a fairly decent trading gain once we have a strong signal given here on the 4-hour chart over the next couple of days. US Canadian dollar. This still looks as if it could be forming a consolidation setup. Yesterday, this was a scenario that was given here. It was provided with the market providing us with a strong bearish signal. And based on this, it was possible that the market would be forming a consolidation setup. And this was a setup that was seen and that was projected on the 4-hour chart up to yesterday. But as you can see here, instead of continuing the movement bearish, the market rallied sharply. But it is still somewhat of a possibility that the market could still form a consolidation. But what will be needed here is a strong bearish signal that takes out this bullish candle. And on the 4-hour chart, it will take the form of a double top formation that will lead to a bearish movement, followed by, and what would be needed after that is another set of bullish and bearish waves to complete the formation of the consolidation. So we're going to be looking out for bearish signals in this region here to get things going. And if it falls down towards this area here at 131, then it increases the possibility that we would be seeing the market form a wide and fairly strong double top that would give way to the continuation of a bearish movement. So all in all, this was the setup. This was the situation on these currency pairs and the pound Aussie dollar that we traded. This slide was obviously before the trade was executed. So as you can see here, I still have that the pound Aussie dollar setup was a possibility and that it needed a signal. And as you can see, the signal was in fact given. And we're hoping that we can capture a trading gain of 100 pips within the next 24 to 48 hours. Pound Aussie dollar, it is outside of the consolidation setup, or this should be the Euro Aussie dollar, is outside of its consolidation setup, and we could see the market either continue to break out bearish or start a reversal back inside of the consolidation. And overall, the main lesson from this, especially from the yen pairs, is that if we know what is required from the market in terms of a signal based on the setup, we have to wait until that signal is given. Anything else that is given is gonna lead to the possibility of a reversal in the absence of that signal. So it's very important to know what type of signal is required in each situation, in each scenario that we're looking at, so that we avoid some of the market traps that the market sets that can lead to unexpected reversals and losses. So we're going to be waiting patiently for the pounds of Aussie dollar trade to close, and then hopefully we're going to be able to capture a strong trading gain and look forward to another trading opportunity on another currency pair. As usual, any questions you have, you can let me know, send me an email, and I'll reply as quickly as possible.